Mid-cap stocks have exhibited higher returns than large-cap stocks historically, and are often referred to as the forgotten size segment or the orphaned index. In this video, we'll go over the 5 best mid-cap ETFs to capture the middle child of the market, and stick around till the end for my pick of the best fund on the list. First is VO, the Vanguard Mid-Cap ETF. The fund has over $60 billion in assets and a low expense ratio of 0.04%. This ETF gets you broad exposure to the mid-cap range of stocks with over 350 holdings, and seeks to track the CRSP US Mid-Cap Index. It's worth noting that VO has a much higher weighted average market cap than the other funds on this list at about $30 billion, so it arguably skews large cap. This may or may not be desirable. Those seeking true mid-caps should probably prefer a different fund. Next up is IWR, the iShares Russell Mid-Cap ETF. Those seeking broader exposure to US mid-caps will enjoy the fact that IWR from iShares has over 800 holdings via the Russell Mid-Cap Index, which is composed of the 800 smallest stocks in the Russell 1000 Index. As a result, just like VO, IWR ventures a bit into large cap territory with a weighted average market cap of about $25 billion. IWR has about $35 billion in assets, but is more expensive than other funds on this list with a fee of 0.19%, so I'd probably avoid it for that reason alone. Number 3 is SCHM, the Schwab US Mid-Cap ETF. SCHM is another great low-fee option for investing in mid-cap stocks. This ETF tracks the Dow Jones US Mid-Cap Total Stock Market Index, which puts it squarely between small caps and large caps. SCHM has about 500 holdings and an expense ratio of just 0.04%. Next on the list is IJH, the iShares Core S&P Mid-Cap ETF. As the name suggests, IJH seeks to track the S&P Mid-Cap 400 Index. IJH is the most popular fund out there for the US mid-cap segment, and for good reason. Its S&P index conveniently screens for earnings, providing positive loading on the profitability factor. The fund has over $88 billion in assets, 400 holdings, and an expense ratio of 0.05%. Last on our list is SPMD, the Spider Portfolio S&P 400 Mid-Cap ETF. SPMD from Spider seeks to track the same index as IJH, but now at a slightly lower fee of 0.03%, which conveniently makes it the cheapest on this list. In my opinion, it also happens to provide the best exposure to US mid-caps, so it would be my choice. SPMD has over $10 billion in assets. What about international mid-caps? It's worth noting that US investors wanting exposure to international mid-caps have basically zero options aside from a pretty pricey dividend fund from Wisdom Tree, which is DIM, with a fee of 0.58% and a pretty low AUM of only a little over $100 million. For that reason, I would either move down to international small caps, for which more options exist, or simply target both small caps and large caps, or the total stock market internationally. You might also be interested in specifically targeting small cap stocks. Click my video here for the best ETFs for those. Do you own any of these mid-cap ETFs, or are you planning on buying any? Let me know in the comments.